The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour, and it is the 14th of October, Columbus Day. Not only is it Columbus Day, but listen to this. It is Thanksgiving in Canada. Huh. You know, I've been here a long time, many decades. And if it wasn't for the fact that at a certain point in time, the Prime Minister of Canada, I can't remember if he married a young woman or whatever it was. There was a woman involved. That's about the only time I've ever heard anything about Canada. Hardly ever. You would not know that Canada has over 3,000 miles of border here. When you think of news, when you think of the selectivity of news, you just have to wonder sometimes, how is it? How do they gather the news? What's on the minds of these people that they can't even follow the border? 3,000 miles. Oh, look in your newspaper today. See if you can find anything on Canada, even just like a hockey. I don't know. I don't know what it is. Anyhow, let's go through the numbers. Thank you, Steve, for 2 great hours, as always. We kick off here at TFNN, 9 o'clock till 11 o'clock Eastern Time, Steve Rhodes. And then we get my show, which is the Tiger Technicians Hour. Same number, 877-927-6648. Straight after me today, Larry Pesavento. Larry comes on, noon till 1. Then you've got Daryl Martin. You've got, let's see, I always go through this. Dave White. Then we've got, it's 4 o'clock till 6 o'clock. You have what? You have the key host, Tom O'Brien, 4 o'clock till 6. Wrapping it up, author of great book, 2 books, a number of books, in fact, and the Gold Report, 600 editions coming up. Check it out, front page of TFNN. Great opportunity to get a bargain. And, you know, Tom is the go-to man. CNBC, whenever there's something that has to do with gold, they call Tom. So check it out. So let's go to our numbers. We've got the Dow down 72. 15,164. The comp index is down 14 at 37.77. S&P is down 9 at 16.94. You've got gold up 15 at 12.83. Silver's up 24 cents at 21.50. Platinum is up 18 at 13.89. You've got high-grade copper up at 3.30. That high-grade copper stuck in the trading range. Crude oil is down a little at 101.40, and you've got bonds up a full 0.01. One little tick at 132.27. How pathetic is that? But there's a reason for it, and maybe we can get into it a little later. I've discussed it many times before. And we've got the dollar down 19 cents at 80.25. Now, what's quite important about this, when we're looking at the numbers, this is what I'm looking at in the E-minis. Now, this is really fascinating. For my service is the besides, of course, being here every day, 11 o'clock till noon, my service is the opening call. That opening call is a very comprehensive look at the markets. I basically every day teach the waveform to my subscribers. I discuss how we're going from peak A to B to C. On the way down, how we're looking at the technicals, etc. One of the things that I was determined to do on Friday, Thursday and Friday, we got a Friday, was to start long positions in 2 stocks that are in sectors that are they've been dismal failures. Why? Because they held extremely well during the 1,000-point decline of the Dow. That's number one. Number two is, within the context of holding their own, is a fascinating thing that happens in the marketplace. It doesn't mean that because stocks don't go down when the market goes down, that they are going to be the ones to scream to the upside when the market goes up. There's no guarantee. But what it does is it gives you a relative sense of the link between the weakness that's going on and what stocks, what sectors, what individual niche areas are functioning really well that are in a way oblivious to what's going on, and that if there is a market turn to the upside, they could in fact start to move sharply higher as suddenly mutual fund and hedge fund and others start to recognize that there are sectors that are not screaming overbought, 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 but are saying underowned, underowned, underowned. And that's the reason why I don't want to talk about this because the day is not even 2 hours old in terms of the market. But fortunately, right now, both are up very nicely percentage-wise in relation to what the market is doing right now. So that's the only way I'm looking at it. We are trying to short what I consider to be one of the most vulnerable areas, and we'll see if that's going to transpire. Just missed the short. I don't mind. There's all day to get it. There has to be some kind of a rally, a kind of a fake out rally. Yes, we're getting to a compromise. We're getting to a compromise, and then at the last minute, someone pulls the rug. It happens every time. We'll go right up until the last minute at this rate. Who knows? Well, now, the E-minis, this is the December E-mini. Look what's happened. Very strong leg E. My contention was that because of the long-legged doji that was formed, the stronger we pull away from the low of 1640 round number low back on last Wednesday, the stronger we can hold, and the better you can hold 1679, which is the 9-period exponential moving average support area in the E-minis, the greater the chance that at least you can define a holding pattern. I say it's between 1679 and Friday's low of 1673. There is very strong support. If, in fact, there is a very disappointing bit of news to the market, that is, later today or tonight or tomorrow, that support will go, and then we just have to deal with it. But in fact, I don't know if I can do this. I'll try to do it. In the break, I'm going to set it up. Maybe I can look back at the Dow back in 1932 at the low of 40, how it ran up 200% in the worst. That was a depression. Anyone who talks about depression using that term for anything that we've seen in the last couple of years, I understand absolutely. If you were in a housing sector, in a market that just saw your housing market blow apart completely, drop 80% in some cases, or 70%, that I understand that. But I'm talking about a worldwide depression has happened in the 1930s. That is just euphemistic nonsense that politicians do. We haven't had anything like it. Everyone is still keeping their cell phones and their TVs. This is not a real depression if you go into the nitty-gritties of that depression. And yet, the stock market went up 200%. I tell you, you got to look at the charts, because if you look at the charts, you can get a lot of information about the internals, what I've always called the X-ray or the MRI of the patient. You want to dig in. You want to be able to see what's going on. That doesn't tell you that a person who's playing tennis, who has the potential for a heart attack, can't go on and on and on and on. It may never have the heart attack, but it says once that potential is there, you've done the X-ray and you know where the fault lies. F-A-U-L-T. Okay, now let's do something else. So here we are, 9-period moving average. You've got the 120-minute chart, which went from the low of 1640 to where? Now, this is the Chapman wave. Let me show you something. That's a peak E. How do I get a peak E? Well, look, you got a price, and it's just moving up. You can use bars, you can use candles. I've just got the bars right here, and they're going up. It's very hard to see exactly what's cooking, but wait a minute. If you do something that I consider to be a very simple technique like this, you start to identify. I like to use the candles for other reasons. In this particular instance, all I'm saying is, in the Chapman wave methodology, it makes no difference whether or not you were talking candles, candlesticks that is, or bar charts or whatever charts patterns you like to look at. Now look what happens. I've put letters from the lowest low, most identifiable low bar. I put an up arrow and it goes, this is leg A. This is floating letter A. This is floating letter A because it's a lower high bar. The whole bar is lower. That is the high of the bar. I'm sorry, I should say the high of the bar is lower. On the following bar, that becomes peak A. And then you break it by 1 penny and starts leg B. 1 penny lower, and it becomes peak B. 1 penny higher than B, it starts leg C. Leg C goes up until it makes a peak, and that peak says peak C. This is the same thing. D pulls back, and then it goes E, floating E. Next one is floating E, following bar, peak E. Then you get a peak F. Then you start on your way down. So that's the basic technique on the way up. So what happens? It goes peak A, peak B, peak C, peak D, and sneaks to peak E. Just a little bit above D. At 1700.25, comes out Sunday, a little bit of bad news, drops 17 points, just like that. Anyone watching it was amazing. And then it goes now to leg A and leg B. I call it gray A and gray B. Why? Because it hasn't broken to new highs yet. So let me change the color. Whoops, change the color of that. I'll show it to you a little bit more expansively. Here we go. I'll extend the chart. Here we go. Boom. And this is what we're looking at. A to B to C to D to E. Plop. Comes back down. And what happens? It goes to peak A, and this is peak B if there's no new recovery high on this bar. MACD is very poor. Stochastic's trying to rally. That's giving some support. So that's just a very simple way of looking at the Chapman wave methodology. And what we'll do right now is we'll go to a couple of things that I want to look at. I want to look at the home builders. I want to look at the sector. I want to look at the Philadelphia Housing Sector Index. In my methodology, the objective is to get you to an E. And once you get to a D, did I say an E? I want to get you to a D. Once you get to the D, you've got to be a little bit careful. And now look, we've got the Philadelphia Housing Indexes, the monthly chart. Goes all the way back in 2005 to a peak E at 293.66. Some of you remember that we got a sell signal almost at the top. I think it was 291. I've got it written down somewhere. And came all the way back down to a trough. The two sell modes underneath the 200-period moving average was the last one. Comes back, tests, can't make it, test right there in 2012, and then suddenly it breaks out. And where does it go to? It goes to a peak D after falling from 293 to 54.31. It goes up to 210. Hey, that's a nice 350% gain. Now it's pulling back. Peak E in the weekly, peak D in the daily. I'll talk about this a little further as we move on into the program. I'll be right back. Dow is down 66.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
The Art of Timing the Trade Charts is the only software package available with a built-in Gartley and Butterfly pattern scanner that will scan thousands of stocks, ETFs, and indices each day to find these patterns and then make them available to you with just a single click of your mouse. Tom O'Brien and Dave White will be hosting a live event for all Art of Timing the Trade Chart subscribers on October 16th at 6:30 p.m. Eastern. And for a limited time, we're offering a promotion where new signups can gain access to this powerful charting software, as well as the live study session workshop coming up this Wednesday night for only $1. That's right, $1 for the whole month with the class included. Remember, this offer is only good till this coming Wednesday night when the workshop takes place live with Tom O'Brien and Dave White, so don't delay. For all the details, visit the front page of TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. As I said before, I want to look at the Philadelphia Housing Sector Index. So now what we're looking at is that the monthly has made a peak D. That was at 210.01. Was that June? Let me just double check. It was in May. Okay. Now look at this. The weekly has gone to a peak E-top at 210.01. It's making a pattern that I call the potential for an H formation. It's going to be really important. Why? Because it needs to break. So 175.27, down 3. It absolutely needs to get above the candle of the 4th of October, 183.48. The moment it does that, all of a sudden you can be looking at a U-shaped formation, which says 191.24 is possible. Wait a minute. It's the candle of last week that is really the issue here. That wick, if you get into halfway into that wick, this is not a Roman candle, but this is the same principle, of 173. You get to 173.50-ish, there's a good chance that it's going to start to fail, and that monthly chart is going to look a lot weaker. So this is a very important period. Why? Because you're left to the daily, and the daily has been forming these H patterns, which has gone to an M pattern. You remember, this is what I was talking about, what I thought the dollar could do, and the dollar seems to be doing that. And this is going to be really important. Why? Because here again, you've got to be moving up. At this point, the stochastics are rallying. The price has moved up. Okay. MACD is not. MACD is not yet deflecting up. It's deflecting lower. So you want to see it cross, and you really need to see a push above 178.80 on the very short term. So I'm watching this very, very closely. More importantly, little frog in the throat there. More importantly, let's look at Home Depot. Home Depot has made a potential. Now, I say potential. I don't like to do this, but this is the technique that I use. Sometimes when everything is holding well and you haven't yet got your sell signal, and I haven't got it in the monthly chart, you have to rely on the other charts to be able to do this. I could, in fact, draw a little a semicircle here to talk about the Chapman wave. I'll do it just to show you, but I'm not going to keep it there for a couple of reasons. But this is a potential that we could see here, that there's one more pop-up in Home Depot, trading at 76.02, down 30 cents, and then it comes back down sharper. But I have to watch this because it's walking the 9-period moving average at 73.74. If it breaks, if Home Depot closes on a monthly basis below 70, give it a little room. 70. No, let's call it 72. Below 72, the weekly gets much worse because it breaks the 72.41, 72.21 last lows of the H pattern, and certainly the 72.47 200-period exponential moving average on the daily will be vulnerable. We'll continue with this in a little while. Mostly what I'm looking at is we've got a caller. We've got Dan in Baskin Ridge. Baskin Ridge. I knew it was. I was just going to say Baskin Robbins, but no. You wanted to look at, Dan?
You could VIIX or VIX or either way. Or
so I'm looking
UVXY.
Okay, I'll look at them both. So let's do this. I'm looking at the volatility index, which is trading at 17.60. Have I still got the chart up here? Yes, I do. Let me go to this. All right. Oh, I've got. Before I break, Dan, if you don't mind, I'm just showing on Tiger TV with a black background. Here, folks, you can see the weekly chart. It failed in the H pattern. It's making the H that goes to making the. Failed the cup pattern, making the H to an M pattern. But wood, which is the iShares Global Timber and Forestry ETF, is holding pretty well, but I'm not yet sure if it's peak E or B. And I won't know until or if it's at 50.57, 47 to 46.50. That's the key level. That breaks at any point, and it starts to come tumbling down. Now let's go to the chart that I was looking at before. Here's the volatility index daily, gone to a peak D, second peak D, and it pulled back very sharply from 21.34, just missed 21.91. Fascinating that it missed the 21.91 high of, I think it was June the 24th. Yeah, June the 24th, and the XIV, which is the inversion of, it's the inverted XIV volatility index, that made a low of 17.90 and then turned and went up. So this is going to be really interesting. Now, here's my problem, and I don't think it's just my problem. I think it's everyone's problem. Because we are now news-based, and we are getting into the tightest time frames that we can. We've got today, we've got tomorrow, and then I think we've got Wednesday night until midnight before some kind of negotiation settlement has to take place. The vulnerability of being right or wrong is so big. I'll talk about this in a moment. Dan, can you hold on?
Yeah, of course.
I'll give you a kind of a plan that I'd be looking at, and I'll be right back with Dan Ridge straight off this. And the Dow's down 60, S&P's down 7.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back. We're back with Dan Besson Ridge, New Jersey. We're looking at the VIX index. I'm actually looking at the VIIX. That's 1 times the VIX itself on the long side, or the UVXY, which we traded as in our portfolios for my opening call, and had a really nice success with that. I'm inclined to do 2 things here. One is just completely have nothing to do with either the VIX index, just looking at certain stocks that seem to be holding well, certain stocks that I think are vulnerable, and treat the indexes as just this wild roller coaster. Oh, I wonder if I have it on my CD. Let me see if I can find it here, because it says it exactly, and I will find it in one moment. Maybe I won't. What a pity. All right. There it is. Slide 456. There you go. This just says it exactly. And this goes back to when I did these cartoons way back in this slide 456, back in the 1980s. And so this is slide 456. And here we go. What does it say? I hope it finds it. Wrong one. All right. Didn't do that correctly. What a waste of time. Pity, because that was what I wanted. 456. This is slide 456. Here we go. Find it. Got to find it. 456. There it is. So there's this roller coaster, and there's this guy, him and his wife, and they zipping down, and then they flying higher. And they get off, and they shaking up, and they look, and he says to her, they don't call it Son of Wall Street for nothing. And that's exactly what I feel right now, that if the first scenario is just to step aside, get your stocks in position. If it works, the stocks that are holding well will do very well. If it doesn't, you get stopped out for a small loss because it's going to be real quick when it happens. And if they've already rallied, that's the position you want to be in. On the short side, you're looking at the weaker stocks, the weaker sectors, or the potentially weaker sectors, and you say, okay, market pulls back. Those are the ones that will make the money. So the only thing, so that's step aside in terms of the VIX index. The other is to say, you know what? What would my loss be if, in fact, you bought something like either the UXVY, which is 200%, or the VIIX? And right now, as it's standing at 82, let's call it the VIIX. You buy it at 82, and there is an overnight discussion that everything is just great, or it's even signed, and the market opens up 15 points. Well, that could be, I can see the VIIX at 82 going down to retest or getting close to the 72.65 level if it's just a whopping sell-off. But normally it goes in stages so you can get out. On the upside of the VIX index, let's just say that there's just that sudden rug pull. Everything looks great, and then, boom, one of the parties says, no deal. Then it would spike. Would it spike from, let's say, right now at 81, 82 or 81.42? Would it spike over 94? Probably. It would spike there very quickly. So you're saying to yourself, I've got about a 15 or maybe even more % risk on the downside, and maybe a 15% more on the upside. I just don't know if now is the time to be doing it. I would much rather have some great optimism come out and see, say, the VIIX, which is something you might want to trade. I don't know, which one would you prefer if you were looking? Would you go for the 200% or the, it's a little less than half. It's at 34, the UVXY. I probably would get a smaller position in the UVXY. It seems to have a better volume, and I like the way it works. So that would be a way of just nibbling right now to say, I'm either insuring my portfolio, I'm doing something, but I would rather wait. I'd rather wait and see this thing go. I'd rather see the UVX have a sudden slide down to below the low of Friday of 31.36, somewhere around there. And then I'm saying, aha, now my risk is it's still a risk, but I've ameliorated that. You know, it's a much better price to be buying at 30 than to be buying at 34 or 36. That's right. Really what I'm saying. So I don't like
using a limit order, you know, just for the next week or so. That's what I was thinking, is because Friday was a pretty good entry, but I missed it. So I was thinking, just putting a limit order in of about, 32 on UVXY or about 70.
Yeah, I think that's. And you think it through. For instance, I have a friend who told me over the weekend that he had an order. Actually, I remember this. He had sold his Tesla, and he put an order in, and went off to, I don't know where he had business. He went overseas, China. I don't know where he went. He put an order in at 162. Well, last week, what was the low in Tesla? 161.50. He didn't even put a stop in. He just put the order in. And it's trading at 179. So if you do your homework and it all works out, I think that's the better way to do it. And then you don't ameliorate your risk, but what you do is you say, I now know a better defined way of working my risk because I want to buy it at a certain point and deal with it that way. So I think that's a better way to do it. And as I say, there's just too much news I was dying to do something this weekend. I just kept looking at charts. I have to tell you, I must have looked at, I don't know how many hundreds of charts. I found so many stocks that were looking really good, and I found quite a number that were looking sort of shaky. But I found more nicer looking charts than weak charts. All I can say to me is that it says there's a bias in certain sectors, and actually a lot of them were low-price stocks. So I'm thinking that the IWM, the Russell 2000 has done really nicely. It's held very well. If there's any support whatsoever over the next week and the market starts to hold well and starts to move higher, we might just see a flurry of activity into other types of stocks. If not, they're all coming down because, of course, if there's real bad news and default news, the market will not like it. So it's a long way of answering your question, but there are two ways of doing a step right out. Wait until the trend is defined, then you can trade the trend, or you put in a limit. You just say it's exactly the price that I want to get it. I think that's the better way to go.
Right. I just maybe one other thing, and I could just take this later. But what are your thoughts about the VIX being up 12% with the market flat? I mean, I know there's quite a bit of uncertainty due to the debt ceiling, but still, I mean, the markets are flat and the VIX is up like 12% today.
Well, the VIX is up because it gapped up because of the news last night. If it's going to start to come down, it's going to do it really quickly. But if it holds, you see, this is the hedge funds saying, I've got a portfolio that's done really well. And it might be that they are covering themselves, and the VIX is just a demonstration of them covering. So you've got an intensity of buying, but it's not buying based on the market right at the moment. It's based on positioning for whatever they have on the long side. This is very complicated. I happen to always think that if the VIX is holding well and the market's higher, watch it real closely because it could be telling you that there's a chance for a sharp pullback. But this is so news-related. We are just vessels on the ocean being bounced around at this point. So I would much rather stick with a portfolio that says certain longs, certain shorts, let the market tell me. As soon as I get a trend, or as soon as I get the signal in my work that there is a trend, I will do it. I will then I might even buy the XIV, which is the inverted VIX. I don't know. All I'm saying is I'm going to step aside right now. I had thought of buying, and then I thought, you know what? Why risk anything? I'd rather sacrifice a decent gain than to be vulnerable to a really poor loss that I took when I shouldn't have taken it. So that's my thinking.
Very good.
I have to tell you this, Dan, that if there wasn't this conflagration going on right now, just the price movement of the markets on Wednesday into Thursday into follow through Friday, there are a lot of positives that I'm looking at, more so than I would have expected. I must be quite honest. I did not expect the veracity and the actual torque that was sustained in momentum all the way into Friday's close. So I have to get that right out. The bias at this particular point, based on certain candle formations, based on the fact that the VIX, in fact, on the weekly chart, went right to this. Look at this trend line, what I call the Chapman wave inside track repellent zone. Right there, if you're looking at my charts, this is the weekly. Failed. It didn't, Friday didn't close above the 200-period moving average of 19.19. In fact, it was a miserable failure in the VIX. Today, it's come back. Now, when I'm looking at patterns, there is a U-shaped pattern that keeps forming. This would be the shortest one in time duration. And it says, okay, don't get too sidetracked here. The VIX is still holding really well above the 9-period moving average. The MACD is good. And the stochastic is not great, but it is starting to rally from 46%. Boy, if ever there were conflicting signals, and all I'm saying is news-related, I'm going to just step aside, not going to get overly aggressive on the long side, not going to get overly aggressive yet on the short side. That's my stance. So I hope that helps you, Dan.
I believe it does. Thank you.
Thank you very much for calling. Always appreciate it. Now, folks, let's just go back to this. So I was looking at Home Depot. Home Depot, we had gotten to the weekly chart, the monthly chart, and I said the weekly chart is going to be important to watch, but it's holding in a trading band. This is like that, in a way, it's like the gold chart. Remember, made the peak F, and they made their big arch formation, tested the left side low, and then still bounced again, and then broke its base. In this case, it's really important at any point in the next week or two, Home Depot goes under 72.30 or 72, that's going to be a very negative action. In the meantime, on the daily chart, it's kind of saved the day. It's trying to rally. It's at 76.36, up 4 cents. Home Depot needs to decisively clear the gap low of 77 round number that was made on the 20th of September, go into the body of this candle of the 20th of September, which opened up at 78.81 and closed at the low of round number 77. If Home Depot closes above 77.35 in the next day or two, it says, hey, I can make an arch formation, a cup formation now to retest the 77 area. So these are all the big ifs, but here's one that I like to look at. This is Ethan Allen. Now, I can't remember the CEO's name. Just slipped my mind. I've seen him for years, decades, actually. Always interviewed. Is a very intelligent investor in his company. He's always doing things innovatively. Ethan Allen. And here you are at the low. Let's go to the low of, I think it was July in the week. I just want to put in the notation. I had it all, but it seems to have disappeared. Go to A, B, C, D, E, A, B, C, and it just squeaks to a D there, and then it pulls back. Well, Ethan Allen is it's the kind of the home furnishings, interiors that I like to look at periodically. Why? Because I always feel that it's more kind of the higher end, and if they are doing really well, very often it is telling me that the buyers that I like to look at, that's the higher end buyers, are the ones that are still maintaining, because they're the quickest to stop buying when things get they get a little nervous. They want to save their money and they don't buy. But it happens so often. So they are not buying right now. It's pulling back, and it's at 25.54, down 83 cents, and it looks like it wants to test the 200-period moving average in the monthly after making a peak F, and it wants to go to 23.78. That's just 2 points lower. But look at the H pattern. All these H patterns that have failed in the weekly chart, and they're the 24.22. So the first level is 24.22. Between 24.22 and 23.78 is major support. Will that come in the next week or so? I don't know, but I'm watching it closely. And then Lumber Liquidators, LL, holding. It's got that H pattern. I spoke about this, I think, about 2 weeks ago. That has gone to an M pattern. I've got an alternate wave count in the weekly. There's no sign yet in the weekly in price that it's going to pull back. But in fact, the 9-period moving average has been taken out twice, but it's closed well above it. The MACD is still okay, but fast-moving average is turning down. And LL is a symbol at 108.44, down 23 cents. The stochastic is just at 80.61. It's turning down. This is the one I'm watching closest because Lumber Liquidators is, in a sense, for me, a bit of a proxy on... it's not just the builders, but I also look at it as spec buying, layperson going in for deals, bargain lumber products. I like to look at this, and at this particular point, it's a high-level consolidation, and it would normally be the last to really sink. So I'm watching this closely, but if it breaks 100, it's at 108.44, 103 or lower, it's in trouble. I'll be right back straight after these important messages. Dow's down 36, S&P's down 4.
Are you ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position subscribers sold recently for a 42% on parts, plus a 64% on rest. At Hertz Global as a core position for 6 months before exiting the position. A current position entered as a turnaround company with good technicals based on Basil's waveform is trading up to 170% of its entry point as a portion sold earlier for a 21% gain. Subscribers to the Opening Call can see the Chapman Wave techniques demonstrated and explained daily to educate investors. To get your 2-week free trial to the Opening Call, just visit the front page of TFNN.com. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday at 11 a.m. Eastern on TFNN.
TFNN has just announced a special sale for 2 weeks only for the Gold Report. To celebrate the 600th weekly issue of Tom O'Brien's Gold Report being published on October 22nd, TFNN is having a special one-time sale. From now until October 22nd only, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, which is almost half off the regular monthly price. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Take advantage of this one-time special offer and pay only $600 for 60 weeks of the Gold Report. This offer is valid for current or new subscribers. Everyone is welcome to take part in this special promotion as we celebrate the 600th weekly issue of the Gold Report. All the details are on the front page of TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, everyone. We're back in the remaining few minutes. Let me go through a bunch of stuff. Look at the IWM. I spoke about it before. I hadn't even looked at the chart. Now I'm looking at the chart and I'm saying, wow, another 13 cents, and it makes leg E. In the daily. That doesn't have to be E. It could be E/A. I'm calling it E for now. But it starts leg D in the weekly. From leg D, you've got to be a little bit careful. But hey, so far the stochastic in the weekly is 93%. The MACD is up, and it says this particular pattern says there's an upside, but limited upside. Limited means it's not a breakout where you're going to see 10, 15 points. At least it doesn't look like it right now. It means it's just going to break to the upside. But the monthly chart is in leg E and extended. The floating letter, remember the floating letter is floating to E again because October has seen a new recovery high, all-time high, in fact. And the MACD and stochastic are very strong. I have to tell you something. On early Wednesday morning, what we were looking at was the potential for time and price to the downside. But because this is so news-related, I didn't have a chance. Maybe tomorrow I'll be able to do it. I wanted to show the Dow from 1932 to 1937-38. And with the horrible news, maybe I can still find some of those microfiche things that I've got of all the daily charts, the daily New York Times headlines. And the price kept going higher. So this is what I wanted to say. I don't want to fight a trend that's in place. I'll know if it's not in place, because if the Dow breaks under 15,000, let me put it this way. If the break's under 14,900, let's call it 900, and closes underneath that, that's going to be significant. But holding like this, high-level consolidation, selective. Now, here's the other thing. Let's just make it real easy. So that's my Dow outlook for the downside. The VIX index, at any point this week, it can happen in an hour, 2 hours, a day, who knows? It could happen in a minute. If the volatility index starts to break down into the 15 to 14 area, that's the VIX index, that is going to help the market move higher. So we're on the cusp. This is, if this news wasn't pending, I'd be looking for a lot more buys. I had a list. I have a list here that it's an amazing list of stocks that I would like to own. I even looked at the FXI. Believe this? FXI, that's China. Look, it's just steadily trying to push high. It's above the 200 period and moving average. The iShares FTSE China 25 ETF, not a great monthly. But I wanted to point it out to say that there are things going on here that, in fact, are, at least for now, a little bit more positive than one would think based on the news. Now let's just quickly go to the IYC. Then I tell you what, IYC is doing well. I'm going to do this quickly. Look, the dollar, DXY. Remember the pattern I spoke about? The monthly chart broke its support. Dollar seems to be somewhat vulnerable here. It could make the H2 and M pattern. Look at the EUR. USD, there's so much to do. There's no time. The EUR is holding well, but look at the weekly chart. That cup formation says there's resistance to the high of 1.3710 back in the week of the 1st of February. Break that to the upside. There's a recycle. That'll probably be leg C to the upside. Actually, all you have to do is break 1.36452, and then I believe that'll be leg C to the upside. Bonds. TLT. Bonds are doing nothing. There is nowhere to go. It's still the issue. Nowhere to go. So this is going to be very interesting, because if they tank the market when there's nowhere to go, you will have to see bonds start to rally. Money will go fleeing back into bonds. I have my levels very orderly here. Close below 14,900 on the Dow. Watch out. VIX back up there in the 18, 19, 20 area. This market goes down. VIX down in the 15 to 14 or lower. Hey, it's good. Stay tuned for Larry Pesavento. He'll give you a lot more. I'll be back tomorrow. Thanks for being here. Have a great rest of the day.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.